Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Thursday, October 16th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. I'll be on the floor of the New York Stock Exchange doing a television spot here with the Schwab Network covering the precious metals in about an hour's time. So looking at these markets here overnight, we do have stock futures continue to rise as an olive branch has been extended from Treasury Secretary Bessent to try and calm some of the trade war fears. You've got guidance, a hike from chipmaker TSMC, really rejuvenating that AI narrative. So if you look at the NASDAQ, up about 0.5%, sitting at 25,055. You do have the S&P 500 up 25 points right now at 67.40. So those earnings beats, those are continuing to roll in, and some of the traders, they're really ramping up those bets here for the 0.5% interest rate cut. You're looking at 25 basis points in October, and then you look out to December as well. So Besset's damage control here has really helped propel this market back higher and calm some of the nerves. So you're seeing quite a bit of volatility. So if you look at your portfolio and you go, hey, what happened here? Why are we seeing a massive sell-off or whiplash type of movements? The reality is that it's most likely some kind of trade talk tariff. Now, if you look at some critical levels in the gold and the silver market, one thing I'd like to note is that this market isn't a raging bull market, but where would things start to try and change? Maybe where is the trend support at? And it continues to rise as prices rise as well and volatility continues. If you look at the silver market, the average true range over the last 10 days has been about $1.70. You look at the gold market, it's closer to $85, $90. That critical level of support on the gold market, $39.77 is where I would look at. At that level, we'd have to see if this market is consolidating or have we seen a structural peak and we're going to start to form some higher lows on the charts. You look at the silver market, that critical level support, 47.47. These both surround about the October 13th low. One Citi strategist said that the choppiness in the bull market with the volatility index staying over 20, you could easily see gold futures climb to 5,000 and possibly 10,000. So that's one of the highest calls I've seen out there. If you look at the ETF flows, gold has logged 4 straight days of inflows, really lifting the holdings here to the highest since 2022. You look at the silver market, you go back and you look about 2 days ago, we saw inflows come in at about 9 million ounces. And then you see the following day, which was yesterday here, ETFs cut about 500,000 troy ounces. So it's a little bit frothy in that silver market, not calling for a top. Many people have on 60, 70 call spreads, $80, $100 call spreads going out into next year. So you look at some of the equity insights last week, Bank of America clients, and this is where the dip buyers are really active. They spent the most ever on single stocks during a week here when the market was down 1%. This is according to Bank of America, and that the retail traders' demand for call options are outpacing puts for 24 consecutive weeks. So it's really every time we get a sell-off in U.S. equities, the dip buyers have been quite active in the markets. Now, if you're working closely again with myself, chances are you probably have long things like the NASDAQ, long things like the Russell, and then how we balance that out is by looking at calculated risk put spreads in the S&P 500. You've got a little bit of weakness in the dollar index, 98.33. That's down about 18 points. And then you start looking at the 10-year Treasury yields, where those are breaking right around that 4% level here, continue to push lower. So it's less focused on the dollar index movement impacting the gold market, and it's more Treasury yields confirming that that short end of the curve here is really starting to anchor at some of these lower levels, and you're seeing the long end of the curve continue to push a little bit higher as you get a lot of refis going through. So you get the angulation and the steepness of the yield curve continuing to go up. You've got stagflationary type environment going on in Germany, in Canada, with some weaker GDP forecasts. And what that's doing here is putting a little bit of pressure on the euro currency, the Canadian dollar here. This is more trend-based, not overnight price action. And that's where you're seeing that gold market really continue to propel higher, even with a higher dollar index. Now look at the volatility index, again, just over that 20 level. You go to Europe and Asia, European stocks rose. You also have Asian stocks advancing, led by South Korea. Investors' bets are improving that a tariff deal will be made here with the US, and that the MSCI Pacific Index rose about 1.1%. Out of the 41 companies in the S&P 500, they have reported so far this season, 78% of them have beaten while 20% have missed. You would see normally retail sales, PPI jobless claims all scheduled, but they're most likely delayed from the government shutdown. So it's the Fed speakers that have really impacted the market recently, with Waller, Barr, Myron, Bowman, and Kashkari all set to talk today. Again, on the CME's Fed Watch tool, 97.8% chance of a 25 basis point interest rate cut, 2.2% chance of unchanged. And then you look at those ETF flows. They're continuing to buy gold, anchoring right around 17% change year to date, adding about 150,000 ounces. Any weakness in that gold market is really being added. And then you get total gold holdings by the ETFs in the gold market up 17%, and gold's up about 60% year to date. The thing about gold and silver where you get this volatility, and there's two things to watch, is that silver, the total market is right around a $50 billion market cap. You go to the gold market, it's about 450. So gold is 9 times bigger than the silver market. So naturally, the beta of the silver market is going to be quite volatile here. And then you start to look at things like, what are the gold silver ratio telling you? Well, it was the breakout when we took out on September 1st above 3,500 on the gold market, above $40 in the silver market. You divide those two out, it's going to be about 87 to 1. Where are we trading at right now? It's about 82 to 1. So you're seeing that silver's momentum is continuing to outpace the gold market at the moment. It could really drive that gold silver ratio quite lower. We're seeing copper futures under a little bit of pressure, with some clients adding in the overnight session. There is discussion that copper smelters over in China are going to start shipping copper over to London to try and take advantage of the higher prices. If you see that kind of headline flow into the silver market to try and alleviate some of that pressure here on the shortage that we're seeing in London, you could see silver futures get quite volatile to the downside. But again, this type of environment, I still anticipate that any kind of dip buyers are the ones that are really going to be active in these markets. Again, I'll be on the Schwab Network later on today. I'll be joining my partner, Bill Baruch, on the Compound and Friends with Josh Brown. That'll get posted most likely tomorrow. And if you got any questions, shoot an email to info@bluelinefutures.com. And remember, futures and option trading, well, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.